We're all about the early retirement movement and passive income on this channel. Investing, starting a business that requires little time commitment, or renting out your house are some of the best ways to generate passive income and retire early. However, investing in Tesla, the massive electric vehicle company founded by billionaire Elon Musk, is one of the best ways to retire early. Purchasing growth stocks such as Tesla is an excellent way to generate passive income. We're all familiar with the computation by this point. As is frequently stated, investing $1,000 in Tesla in 2011 would now be valued $204,000. Therefore, let's aim a little bit further out than usual, 10 years since 2011. How about we decide on 2031 as our reasonable goal? In order to retire then, how many Tesla shares would we need? When and where should you invest your savings to do that? Click the like button, subscribe, and watch more to learn more. Financial independence. Retire early is referred to as FIRE. People who are motivated to retire significantly earlier than the age at which most people anticipate to be financially independent based on their present salary and lifestyle, also known as FIRE, are becoming more and more popular. FIRE was inspired by the best-selling book Your Money or Your Life by Vicki Robin and Joe Dominguez. Readers were urged to calculate the hours needed to pay for each item in the book. Due to changes in society, fewer people now aspire to have multi-decade careers. Other than pension funds, what other solutions are there for this issue? Most of the time, it's an illusion to retire comfortably because so few individuals can truly make it work. A FIRE believer invests far more in their future than the average individual does. But if you start early and save a portion of your wage every month for investments, especially in a firm like Tesla that has great promise for the future, you may increase your retirement savings to the point where they can secure your financial future in later years. To put it another way, raise your savings rate to the point where you can purchase Tesla shares with an eye towards 2031. The biggest inflation rates in decades occurred in 2021 and 2022 alone, at above 8%. Even if this is significantly greater than historical averages, you need at least account for 2% yearly inflation, which is why compound interest investment is important. The COVID-19 retirement wave has resulted in an estimated 3 million additional persons reaching retirement age. This is the pleasure of investing and temporarily putting inflation out of your mind. Even at just 20 years old, Tesla is already dominating its industry, opening doors for a more sustainable future, and drawing in a sizable number of hungry investors. Its stock's steady drop appears to have stopped, so while it doesn't imply everyone should, it might be a wise investment for some. It is not a good idea to put all your eggs in one basket, so to speak, as this raises the likelihood that you may lose a sizable amount of your investment in a single company or industry. Never risk your life money in such a way. However, the cost of Tesla stock is an additional element that will restrict your spending. The current market price of around $200 per share may present challenges for investors with only a few $100s who cannot afford to purchase a whole share. Fractional shares would be a better choice. It's important to remember that not every broker will make it easier to buy fractional shares of Tesla. The long-term potential of the company must also be taken into account. Even if a 2017 study found that equities outperform Treasury bills, you can better manage your money if you stick to wise investment choices. Government bonds have not done as well as the stock market. Roughly 52% of stocks see a negative return. We believe Hendrik Bessembinder of Arizona State University to be reliable in his estimate that more than 26,000 enterprises declared bankruptcy between 1926 and 2016. Nonetheless, we think it makes sense to invest in Tesla. Despite the uncertain future of that company, Tesla has made quality and safety the cornerstones of its brand. With $7.7 billion in cash and $24.6 billion in debt at the end of the year, Tesla had set records for sales, profits, and cash flow in 2020, 2021, and 2022. The company is expected to have $24.6 billion in net cash by 2025. Early investors may become extremely wealthy if Tesla is able to meet its targets of growing yearly deliveries by 41% from 500,000 in 2020 to 4 million in 2026. Analysts project that given the current market price, Tesla's growing economies of scale and higher average selling prices will make it one of the most profitable automakers in the world by 2031. What are the opinions of other investors regarding the $2,500 price target? This amounts to a 287% rise in value over the stock's current price. The vast majority of finance experts recommend purchasing. Because the bull market is venturing into unknown waters, diversification is necessary. Conservatives recoiled as DeBolt Page, a former Google employee and devoted Tesla fan, went to social media to reveal his newfound wealth. Bulls for Tesla shouted their excitement for the company's prospects. Even so, investing in it carries risk. I can't possibly lose money by spreading my bets, but I would never in a million years risk everything on a single investment that has the potential to soar, according to a blog post. 14,850 shares of Tesla are owned by DeBolt, whose average cost basis is $58. He believes that the 2,500 shares he purchased in 2013 at a price of $7.50 a share are currently valued at $2.2 million. Perhaps 50 years from now, there won't be another Tesla. One of the most crucial aspects of retirement planning is figuring out how much money is needed to retire. What is the approximate number of Tesla shares required to retire? Your pay and retirement plans will ultimately dictate the response. If you are aware of the suggested savings rate for your age group, you may make better retirement plans. It's simple to make the mistake of recommending a sum based on your age, but the reality is that you probably have very different retirement savings objectives than your siblings, neighbors, or even coworkers. Most authorities concur that a variety of circumstances, most notably your lifestyle choices, influence your specific requirement. For instance, if you make $100,000 before you retire, you will need at least $80,000 annually in retirement. You should have saved at least 25 times your annual expenses before retirement, even before inflation and stock appreciation are taken into consideration. For instance, $1.25 million in savings would be required to offset a $50,000 annual expense. You can receive a payout of up to $2.5 million for $100,000. Online retirement calculators suggest that you need to save roughly 25 times your annual income in order to live well in retirement. If you set aside 20% of your income annually and assume that your assets would yield 5 to 7% after inflation, you would need 37 years to retire in 2031. If you saved 25% of your income, it would take 31 years. How then can we fulfill this FIRE objective? Although you can use the techniques we demonstrated in the video to calculate a personalized quantity, which would vary person to person depending on their background, salary, predicted lifestyle, and other factors, there is no magic number of Tesla shares one must purchase to retire comfortably. Finally, but equally important, diversify your wagers. By adding Tesla to your portfolio, you can diversify the impact of any one industry on your savings and profit from their growth if you also have assets in other automakers or renewable energy companies. What is the approximate number of Tesla shares you own? In 2031, will you retire? What number will you require? Please leave a remark below. We would adore to hear what you think. Please remember to subscribe and give this video a thumbs up if you enjoyed it. In the upcoming video, I'll see you. That means that the number of Tesla shares you'll need to maintain your financial stability after retirement will depend on your annual cost. Please share your thoughts with us in the space provided below for comments. Give this video a thumbs up if you found it helpful, and if you're, click the subscribe button and notification bell if you're new to our channel. I'll see you in the videos that follow.